Hey everyone, how's it going? Welcome to another episode of the Path to Profit podcast. For joining me for the first time, my name is Bobby. As I do every single week, breaking down everything that went on, the overall market, industry groups, and much, much more to get you ready to trade for next week. So, without further ado, it's time for the rapid review. All right, so as always, agenda and timestamps are down in the description if you'd like to jump around, but make sure you stay tuned to the very end where I give my 0 through 10 rating on this market so you can see where I think this market is going. But let's get started with the current state of the market. Market direction, we're in a market in correction. We ended off last week in a confirmed uptrend. Then throughout the week, we had a change. On Thursday, we went to an uptrend under pressure. And on Friday, we went into a market in correction. There's distribution gain on both the NASDAQ and on the S&P this week. And then overall, with the breaks of some key levels on Friday, which we'll look at when we go over to the charts, we ended up going into a market in correction. With that being said, we no longer are looking at distribution days, and we are now one day in the current trend, market in correction. What we will be looking for, though, moving forward is going to be rally days and follow-through days. If you're not sure what those are, make sure you read How to Make Money in Stocks and or go to investors.com. Not affiliated with either of these. And they have a pretty good breakdown on what rally days and follow-through days are. But to give you an idea, overall, it's just an indicator to use to let us know it's okay to start buying stocks and that the probability is that the market could be turning around. So we should be changing the way we're looking at the overall market. But nothing here, no rally days yet. So stay tuned for that. Distribution day tracker is going to be on hold because distribution days are no longer applicable, but we'll be back soon once the market does turn around. So stay tuned for that. But we're jumping over the moving averages and seeing a major change. Last week, we were above every single moving average except the 50-day simple moving average on the Dow. And this week, we broke below everything. Now, completely red across the board on all indexes. Major trend change seeing all this happen. And we'll see it again when we look over at the charts, but a lot of red. For the week, S&P was down 4.55%, NASDAQ down 4.71%, the Dow down 4.44%, which leaves us with 2023, the S&P up 0.58%, NASDAQ up 6.42% leading out the year, and the Dow, the only one down 3.73%. So major change this week, and we'll jump over now and take a look at the charts on Thinkorswim to really get an in-depth look. All right, so we'll start off by looking at the NASDAQ on the daily. Zoom in so you can get a little bit better of a look, and you can just see we finished off last week where we looked like we were starting to maybe put a bottom in, maybe start climbing back up, maybe make an attempt at these price levels right here. And you can see that quickly changed throughout the week as we just fell down, broke below all these moving averages. The most important on the NASDAQ being that 50-day simple moving average that we were holding above and seemed to have found support at. Breaking through those levels was a major indicator that shows us that the market direction has changed, hence why we've gone into market in correction. If you zoom out, you can just see what looked like we were starting to maybe climb up. Now looks more like we're starting to trend downward again. You can see it again even better here on our weekly. See this overall downtrend and just the downside volume that's coming in. You can see that all right here. Now on the downside, look, from here, there really isn't much other areas that I think we could find support going on the downside. Really, it looks like it's no man's land all the way down to the lows. Maybe you want to look down here at like the December 28th area to see. But I mean, that's just so close to the overall low back from October 13th that I could see us pulling all the way back down to this area. The big thing, which we got a ways to go, maybe, but so far as ways down, would be if we break into new lows, this could be even worse than it looks right now. So, but right now, it's just direction has changed. Make sure you change the way you're operating in the market. And yeah, it's pretty clear. We'll jump over to the S&P. There's only one real slight difference in the S&P. Everything else seems to be similar, except we do have an area of support. If you look here at the December 22nd low, I would watch how we interact there. If we do find support there, that's a positive sign. If we break below, just again, another further negative sign. And then there you have the market low. And I'll show you guys the weekly as well. You can really see the clustering, though, of the distribution coming in as of recent, and a lot of the high downside volume over here. So yeah, that's all we have on the indexes. Comment below if you have anything that you would like to add, if I missed anything, or what your opinion are. And you know what? Hey, if you made it this far and you're enjoying it thus far, subscribe, turn on notifications. Like I said, I do this every single week, so this way you can stay on top of it. Next up, we have the industry groups. We're going to be the top 10 and bottom 10 weekly performers and jumps and falls in the rankings. And then we'll be looking at the top 20 industry groups, as well as some stocks in the top 10 industry groups. I did not highlight any of the stocks breaking out just because I don't think this is the market to be purchasing any stocks, but we'll get into that a little bit later. So we'll look at the top 10 weekly performers. The interesting thing here is only one out of the 197 industry groups was up for the week. One, food dairy products. 196 of the 197 industry groups were down this week, showing you this is clearly a broad market sell-off that happened this week. So that's really the only thing wanted to kind of add on the upside. And then we'll look quickly at the downside, bottom 10 week performers. No surprise there if you're following the market this week. The banks, the worst performer. Other than that, not much else to add. Biggest weekly rank jumps. No trends, nothing I'm seeing here, but definitely something we're going to keep an eye on to see, because you'll see a little bit later, we're definitely seeing a lot of rotation, and that's something you want to pay attention to. So this will show us where maybe some of that rotation is coming in, but I'm just not seeing anything that's jumping out at me that's super important given the market action this week. And biggest weekly rank falls. On a week like this where it was such a broad market hit, it's like almost looking at like, all right, who got hit the worst? I don't know if that's very, very informative this week. So another one that not really worth paying attention to this week. You have 20 through 11 on the screen. You can see, though, this is where we're starting to get a lot of that rotation. You're seeing that the 20 through 11, a lot of these stocks came from outside of that 20 spot. You have 1, 2, 3, 4, 5 out of those 10 stocks were outside and far outside of the top 20, 20 through 11 that made its way up there. One of them going from 37 to 20, the finance, mortgage, and relative services. So pay attention. We're definitely seeing a lot of rotation, and I think that's important to look at. And we'll see a little bit more of that as we go into the top 10. So with that being said, we'll look at the top 10. There's the criteria of the stocks I'm going to be putting up on the screen. And again, did not highlight any stocks this week. There's only a few. Just because I don't think this is the proper market to be making any sort of purchases. So what we're going to do is going to jump over to MarketSmith. And let's get started with number 10. This is steel producers. This was number 2 last week, dropping down to number 10. That being said, this is the type of group I'm probably not going to be really focusing on, because you can see that clearly the relative strength is going in the opposite direction that we want, going from 2 to 10. So not really much to say here, and no stocks to mention. Number 9, this is a group I'm sure many of you have been talking about, because I know I have. Electronics, semiconductor, fabulous. This is a group that has clearly been showing strength. If you're doing your stock work on a weekly basis or a daily basis, you've noticed that a lot of these stocks have been performing fairly well. And last week we had this group jump into the top 20, which we were looking to see happen and finally did. And now we've seen it finally jump into the top 10. So this just shows you the importance of really doing your stock work, because you could have seen this coming. And we have talked about this happening for weeks and weeks and weeks, and it is now official in the top 10. In terms of stocks in this group, those are your 3 meeting the criteria. But I think if you go through, you'll see there's a lot of different companies in here that are definitely actionable. One that doesn't meet the Campos composite criteria that is definitely worth talking about would be monolithic power. So pay attention, go through this group and take a look. There's definitely merchandise. I just don't know if now is the right time to purchase anything. Number 8, 9 to 8, small move. This is a one stock group, not worth paying attention to. So we'll skip over that. Number 7, this jumped up from 26 to 7, wholesale electronics. Another small group, not really worth paying attention to in my eyes, but I like seeing those big, broad groups where I'm going to be able to see a whole industry move versus just a few stocks making a move. There are a couple stocks to note that meet the criteria, but not much else to add there. Number 6, jumping from number 12, you have building, maintenance, and services. See that on the screen. Not much to highlight here. A couple stocks to show you. That's really all you got on that one. And number 5, this is a group, leisure, gaming, and equipment, that is definitely worth paying attention to. This is a group that we've been talking about week after week. And I think a lot of people, even outside of stocks, understand from a, I don't know if I want to call it internet gambling, mobile gambling, virtual gambling, however you want to call it. Let's just call it the new age of gambling. There's a lot of these companies that are dabbling in that area. It's definitely a trend change in terms of how these companies are operating. And if you look at some of these companies, DraftKings, Churchill Downs, many other the companies in this group, I think they're worth paying attention to. And we'll see who becomes the leader in this space. But needless to say, this is a group I would 100% be paying attention to. And that's the one. Churchill Downs is the only one that meets the criteria. But needless to say, pay attention to this group for sure. Go look through some of these stocks, get to know them. I think this is a group that might be worth paying attention to because there's a good chance you're purchasing some of these stocks in the future. Number 4, commercial services leasing, 3 to 4. Seeing this group fairly, say, for the past probably month. Got hit this week, though. Dropped down, like all of these, actually. That's one thing you also notice that I didn't mention. Every single one of these groups, like we said, down again, even in the top 10. Couple stocks to mention there. Number 3. So this one jumped from 22 out of the top 20 into the top 3 in 1 week. Not a massive group, but still seeing a big movement like that, definitely would like to pay attention to it. And that is Computer Integrated Systems. One stock to mention there. All right, number 2, telecommunications, cable, and satellite equipment. I think this is a big jump, 18 to 2, number 1. And number 2, I think this is this kind of space, telecommunications is definitely one of those spaces that I've seen some kind of relative strength in that area. So it's groups I've been paying attention to. This making a big jump, 18 to 22. And a couple stocks to mention there. And number 1, not really worth mentioning, super small group, metal producers, distributors. Only 3 stocks in this group, nothing really to mention here. So it's really all we got on that. But look, I think the big thing to talk about here is just that industry groups are seeing a lot of rotation. It's definitely worth paying attention to. Continue to do your work. Even when we are in a marketing correction, you want to be prepared. You want to know where the relative strength is in these industry groups because it's going to lead you to the next big stocks in the next big market. So be doing the work, stay on top, and really get a feel for what's going on. Something you got to do every single week if you want to be a successful trader. All right, let's go now to earnings. New thing I'm doing here is only showing you 90 composite stocks reporting the following week. There you have those on your screen. Remember, it's also important to pay attention to any of the stocks that are on your watch list or in your portfolio. If they're reporting next week, you definitely want to be aware it's a volatile time period for those stocks. So it's important to know when that's coming out. Now, the stance on the market. So this is, as I grab my board, 0 through 10 rating on the market. Last week, I was at a 6.6, bullish, but some concerns. We were starting to turn around, but there was definitely still some concerns as to what was going on in the market. As I'm sure you can imagine, this week going to be a big change. Just as we had a drastic change in the indexes, there's going to be a drastic change in my score, and that score is going to be 3.3. So, yes, okay, why 3.3? I think it's pretty obvious. We broke through some key levels on these major indexes, showing you that there's a massive trend change. If there's a massive trend change in the overall market, we know that most stocks tend to follow the overall market. Now, yes, I had a couple stocks that were holding up, that were right around their 21-day exponential moving averages. And you may be saying, well, if these stocks are holding up, why the 3.3? Look, when we have that broad of a market hit, I do not want to sit around and find out if my stocks just happen to hold up while the rest of the markets get hit and their turn's just around the corner. I had some profits, had some small losses, but when I saw that movement, I think it was very clear to me that this isn't that super strong moving bullish market that I want to maybe say, oh, this might just be a hiccup on the way up. This is a little bit different. I'd rather sit out and wait. If the market does turn around in the next week or two, there'll be plenty of stocks and there'll be plenty of time to purchase those stocks. For me, I'd rather just step aside. I went completely into all cash and just wait and see what the market decides to do from the sidelines. Mark Minervini, if you follow him on Twitter, he's talked a lot about this. That staying out power is a very strong skill that top traders have. So, with that being said, as I'm dying at the end of this podcast, take a sip of my coffee, and we'll finish this one out. Again, subscribe, turn notifications, do this every single week. Top right-hand corner, I have the first review that I've done, IBD paper, so check that out. Bottom right-hand corner, I'll just put the chart breakdown playlist if you want to check out some of the old chart breakdowns. That's all we got. Stay disciplined.